Good morning, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on Wednesday, the 17th of May, 2017. The market is on the move yet again, has been resting in this critical area overnight, seeing a trend developing in the U.S. bonds um, and in safety assets. Currently, gold pushing 1.3% rise, $16.10. So keep an eye out. Don't be stubborn today. This move could be sustainable. Seeing broad participation across several sectors. Anyway, let's start out. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. For those of you who are just joining and just had a look at their trading platform or charts, you noticed a nice wide gap this morning. That's on news that came out last night regarding the potential that President Trump in February had asked James Comey, the FBI director who was fired last week, to shut down the investigation into the former National Security Advisor Michael Flynn. The White House has a rebuke. The White House has denied this statement. But apparently, there's a subpoena going out to see if this memo or this conversation um, can be confirmed. There's so much noise out there when it comes to news, so many allegations, but this is clearly obstruction of justice if it is true, which puts a lot of the Trump rally into question, the policies, the tax breaks, all that stuff, and the market's responding accordingly. There's a uncertainty ahead that the market's pricing in, and that's what we're seeing. So that's the key news that's been driving us throughout the night last night. Uh, the the British unemployment rate falls to a 42-year low of 4.6%. Um, that came out this morning. In other news, the only other thing I see that is worth mentioning was was the EIA or API crude oil release. The inventories came out showing a rise or surplus of 882,000 barrels versus the expected drop of 2.3 million barrels that we might see today here in our inventories report. As far as what we are looking for coming into the session here today, the only thing that's really ahead of us is the 10:30 Eastern Time DOE crude oil inventories expecting a draw of 2.75 million. For distillates, expecting a draw of 1.25 million, and gasoline inventories expecting a draw of 1 million. Former Fed Chairman Bernanke speaks at a conference at 11:10 Eastern, and we get Cisco after the markets, and that's pretty much it. Today, also at 2:30 Eastern, WTI June 2017 options expire. So be aware of that if you're holding a position. Probably have been pushed out by your clearing firm by now anyway. So let's take a look at what we expected yesterday. Primary hypothesis yesterday is for the market to test up and immediately find sellers and open rejection reverse is what I had anticipated. And I expected it to push back into the 2400 point of control there, 23.99.75, and for the market to push down through that to 23.97.75, and then to rest in the 2400 area. That's the primary hypothesis. The primary hypothesis is bearish, has a bearish bias, and is looking for the bigger move to be to the downside. And that's really what I was stalking from the open. The secondary hypothesis is for the market to revert to be responsive initially, but to find a base at about 2401 for a rotation back up to 2409. That did not happen. Hypo 1 actually was in play. It did push farther than I expected. Here it is. We open, we tick up, and then we have this rejection reversal. It pushes down into 24. The 2401 pushes through by 20 by 2 ticks, 2450, and then I was looking for failure to push up, and then the continuation lower. The continuation is expected to hit the prior day's point of control, and then the prior day's value low, and then stabilize in this area here. What it did is it pushed through all the way down to 93.75, consolidated in the middle of the range. We have somewhat of a Gaussian profile with a clear cutoff LVN at the opening swing low. The opening swing low is right there. You can see very clearly where the market had its first bounce. That opening swing low is right at the LVN 2450, and then the market retested that 2450 and failed to hold and just sat sideways into the close. This morning we are trading much lower. Currently trading at 2378.75. The market rested down here, down at the 2383.50 MC point of control. So let's look at that real quick. Here are the flex levels. When I bring in the flex levels, right in here, hiding behind the FOMC high and the NFP low, is the MC point of control. It's this black line that's basically 2383.50, and well, yeah, the 2385 actually. I need to shift that. So let's make sure. Okay, it's 2385. That's right. And so what we did last night is we had a quick drop right off the open. There's a quick drop. We rested right here at 83.50. The MC point of control is right above it at 85 right here. The point of control is right on top. And we sat sideways for the entire session until just now. Just now we had a quick burst in the bonds. Check out the bonds here. This is the bond market. This is a big daddy right here. It's been trending down for the last week or so. We've had a gap up. The market has stabilized over the last couple of days. We have a composite that's been formed. This morning we opened and we ran straight up. This market has legs to the downside, in my opinion. So you see that across the board. The market's just moving to safety. We're getting a little bounce now at 2376. We have a pretty decent resistance above us between 2383.50 and 2385, and that's really what I'm looking for today. So overall, we did make new all-time highs yesterday, and we have fallen and put in a lower point of control. So in a way, this sell-off is technical as well as news-based. We have a point of control that's up here, and then we shift. Price goes higher. We have a higher low, higher high, yet the point of control has shifted down. And what's happening now is that the market is following through with that point of control and trading below the gap zone that we left behind. We're putting in another gap zone from below. I did mention a couple days ago, I think maybe Friday, that this point of control is expected to be tested from above in the next couple days. It's doing it in kind of a very erratic way or very quick way this morning, but right now this gap is unlikely to get filled, and it's likely to get a bounce later in the session, but for now it has some legs. So this morning, I'm looking for an open auction as the market reopens. You have that updraft from the buyers that is likely to come in. on every dip, every time we get to the low end of this micro composite right here, this is basically our balance range. Every time we dip below that, we get a nice push up. So for the primary hypothesis, I'm looking for an open auction. I'm looking for this information to be digested. I'm looking for responsive buying back into the 23.85 and a quarter. I'm looking for a push to 87.50 and then a consolidation into the afternoon. That's the primary hypothesis. The primary hypothesis is looking for responsive buying. There's a potential that it can close more of the gap, but overall, we're likely to come back into the key balance area of 23.85 and 23.87, and that's really what I'm shooting for this morning. I'm looking for an impulsive push up, a um, an impulsive push up, and I'm looking for a way for the market to consolidate, to get the long on and push, and to ride the next wave in the buying direction. Okay, the alternative is hypo 2. We're in balance. We're out of range. And so there's a possibility for an open test drive, potentially an open drive, open test drive, or an open rejection reversal. Um, and so what we have here is a potential for the market to, given that the news may not have been, depending on how this plays out, there's such a huge X factor here in the news. Who knows what once these congressmen and the media engine starts spinning this morning, who knows what else is going to follow during the session today, what's going to be said by the White House and so on. It's just so incredibly messy. But there's a strong impetus here because we're way out of whack. There's a strong impetus here for a driver to step in. There's a reason for a driver to buy, seeing lower prices, seeing value in purchasing and completing a sizable long position, or somebody who may be hedging a position with futures to the long side. But there's also impetus here to clear the deck and move to safety along with everyone else. So with the second hypothesis, it's really, really important to see how the first move occurs. But if we do get an open drive back, then I'm looking for this to be an exaggerated move and for the shorts to be to be squeezed fairly quickly. There's a fair amount of overnight short inventory imbalance, and that may be rebalancing on the open. So I would not, if you have a smaller account, I would not fade any of these moves. You're going to lose that account really quick. And I'm seeing that happen on some of the people that I'm watching right now, where they've in this one move overnight, they've lost 50% of their account already and are getting into our liquidation zone. So it's just not smart to do that. So look for an open test drive, open rejection, reverse. A hypo 3 is a quick rebalancing of inventory and then impulsive moves down. In that case, we're looking for 2370 as the next key area. This is the best scenario here. It leaves this nice big gap zone behind, right? And it starts to really squeeze people out. Now we're seeing this move again, getting participation across the Treasury infrastructure there, the Treasury sector. We're seeing it in gold and in the yen and so on. So it may have legs, but there is a fair amount of volatility and movement. And generally, when we get an expansion of volatility, it leads to indices pushing to the downside. In that case, hypo 3, 2370, 75. I'm going to leave you with that. I need to get back to watching the screens and taking care of business here and taking care of myself. So good luck today. This is not a good day to be stubborn. Okay, just you have plenty of time to allow the market to establish what it wants for you to jump in with your money. Do not feel compelled based on the noise on the Twitter feed and some chat room or whatever. Don't feel compelled that you got to put your trade on right away, otherwise you're a loser. Your goal is to make money, not to be right, not to be labeled a master trader or loser or whatever. Your goal is to make money, and the only way to do that sustainably is to identify that probability and to put the trade on when it shows up. Good luck and take care.